Distributions are the first and foremost. So we listed in 2014. We have a Mr. distribution. Our objective as a fund is to grow our distributions at 4% per annum. We haven't been doing that in the last few years, and the reason we haven't been able to do that is we sold some very high yielding assets and we've redeployed that capital into some development assets. Those development assets are starting to come online, and if it goes to plan, we will get back into that position where we can look to start indexing distributions against.
We also report a metric called adjusted funds from operations, or AFFO, which is a property metric, and it's effectively the net income that we produce after expenses. So income, not capital growth on our investments, that is available for us to distribute out to our investors as distributions. So AFFO and AFFO growth is important as well. We have been growing that at 4% over the prior year. The increase is about 2% this year. So that's something that investors should be aware of and the drivers behind that. And then secondly as well, there's no doubt as we've moved into a higher interest rate environment that investors are increasingly looking again at gearing. And of course, we've used debt to fund the development of a number of the investments and assets within the portfolio. And so our gearing has gone above our target range being 30 to 35. Pro forma after the accounts, it sits at about 38%. However, as part of those full year results, we articulated to the market our intention to do some non-core asset sales so that we can bring the gearing back within its target range. What we're focused on though is what that capital is being deployed on, and it's two key things. One, it's macadamia developments, which are leased out for very long term, which are providing additional income generation within the portfolio. And then it is the development of some assets which we will operate in the early term prior to leasing, but they will become far more leasable once we've developed them and converted them to high value operations. So they're both income generating activities for which we're deploying that capital, which improves AFFO and then improves in the long-term distributions, which is sort of where we started.